The initial era of FinTech was defined by the glass on our smartphones. Between 2010 and 2024, the industry focused on intuitive interfaces, colorful debit cards, and rapid customer acquisition to build a digital-first experience. Behind those interfaces, the world still relied on batch-based settlement systems dating back to the 1970s. While the apps felt instantaneous, the actual movement of money was delayed by legacy banking cores, creating a persistent liquidity drag across the global financial system. The funding winter of 2022 through 2024 signaled the end of this approach. Investors realized that a modern digital skin could not compensate for the inefficiencies of an antiquated backend, making the front-end-only business model increasingly difficult to sustain. This chart illustrates the industry's significant pivot. When global fintech investment rebounded to $116 billion in 2025, that capital avoided consumer marketing. Instead, the funding concentrated on the back-end institutional infrastructure that supports the entire system. The year 2026 marks a clear transition toward the systematic re-engineering of financial plumbing, prioritizing structural integrity over outward-facing design. In this new environment, regulation acts as architecture. Laws like the U.S. Genius Act provide the technical and legal blueprint necessary for building a durable digital asset infrastructure. Under the Genius Act, payment stablecoin issuers must operate with 100% reserve banking. Every digital dollar issued must be backed by liquid U.S. Treasuries or cash, moving digital currency into a strictly regulated, high-trust environment. The European Union's FIDA regulation takes a different approach by focusing on data mobility. It mandates that financial institutions provide customers with their own data immediately and free of charge, allowing that information to move between providers the moment a request is made. This regulatory clarity drove a significant wave of mergers and acquisitions in early 2026. Major players like MasterCard and Ripple acquired B2B infrastructure firms to integrate these regulated settlement pipelines directly into their own services. The institutions leading the industry in 2026 are those that have built their technology stacks to be compliant by design. Beyond compliance, the operational focus has shifted to Agentic AI. These are autonomous systems capable of reasoning through multi-step workflows to execute complex financial logic without constant human oversight. Unlike traditional automation, AI agents take multi-step actions based on high-level guardrails. They execute transactions while monitoring for fraud in real time. For corporate boards, ROI is now measured in direct capital impact, specifically cash identified and recovered on the ledger. Agentic AI functions as the primary autonomous operating system for modern banking. This system relies on a programmable value network. At this layer, the distinction between a financial asset and the payment rail used to move it begins to disappear. This has enabled a boom in real-world asset tokenization. By converting bonds, private equity, and real estate into digital tokens on a blockchain, institutions can offer fractional ownership and settle trades for these assets instantly. These movements are synchronized by the ISO 2022 messaging standard. This protocol allows complex data to travel alongside the payment, automating the reconciliation process and removing the friction that used to stall corporate cash flow. The concept of a multi-day settlement window is increasingly obsolete. In 2026, the baseline expectation is that value moves as fast as the data that describes it. The financial landscape of 2026 has entered a foundational phase, moving beyond experimental disruption into the deployment of a resilient, multi-layered institutional infrastructure. This massive re-engineering functions invisibly in the background, where autonomous systems handle trillions of dollars flowing through global markets. While the backend is defined by the complexity of blockchain ledgers and AI agents, the consumer outcome is simplicity. International money transfers now move with the same speed and ease as a standard text message. The roadmap for future leaders centers on this transition. Competitive advantage now belongs to those who have modernized their core stack and moved to cloud-native, real-time architectures. The true fintech revolution involved rewriting the invisible rules of how the global economy operates.